Okay, I'm back. Hello, hello. Yo, welcome back, my friend. Just wait a minute for everybody else to come back. I figure, during a crisis, fucking everything goes to shit, right? Computers go to shit. The car gets smacked outside my house. Fucking everything and anything under the sun goes fucking haywire. Ugh. That's the way shit works, I guess. All right. So getting back on my little rant or whatever. So we're in the fatigue stage. What's the fatigue stage? It's starting to settle in that things are not going to be normal. They can sit here and tell you that they're going to be normal, but it doesn't matter because they're not normal today. Uh, you are do something. Yeah, I am. So yeah, so we're getting to that fatigue stage in the economy, and that's the worst stage. That's the stage that we are looking for a bottom. Now we're at all-time highs. What are you talking about bottom? No, 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 no. Stand by, wait, chill. Right now we are, yes. For now we are. But, fucking keep switching. No, I don't want to upgrade, Habibi. Yet. So now, yeah, so what I'm trying to say here is that once we start getting the next wave down, okay? And let's say it looks like that. Well, I don't know. Whatever, comes all the way down. When we get the next wave down, um, and you have this fatigued set in, you're tired of hearing about vaccines. You're tired of listening about the fucking stock market, how great it is. You're tired of things are going to go back to normal. Buy the dips. It's the fatigue stage, which is the bottom. Okay, and I'm telling you this now before it all starts going to shit. Because when it does go to shit, and I'm telling you it's bullish, you'll be like, no, Nick is wrong again. The market went down. No, he's wrong. Yeah, well, I'm telling you this now. So there's no confusion as to that, well, Nick is just being the opposite. No, it has nothing to do with me being the opposite. It's not about that. It's about going through the stages. Um, what did I say when this all first started? You cannot take the number one, two, three, four, and five economies out of uh, the world out of the world economy and expect that things are going to be fine going forward. You're going to go into a recession, possible depression, right? You can't shut them down, and then the whole entire world shut down their borders. Market went up. Yeah, but the market is going up. Yeah, but it's not supposed to be because the economic data is garbage, right? So it's going up. Why? Because of stimulus, right? Endless of trillions of dollars buying back stocks, backstopping risk. You know it all better than me. Okay. Now that they fired all their bullets and the tweets are going to go away here soon because Trump is going to lose, nobody's really going to give a shit about these things. It's played out. It's worn out. So uh, I've been having these conversations on the internet, and people love mathematics when it comes to, well, 99% of the people are fine. They're just fine. Well, they understand that mathematics. But when it comes to the mathematics of exponential growth, my friend, I don't understand. What is this exponential? What? No, 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 no. More people died from cancer. More people died from car accidents. That mathematics they understand. Exponential, oh, I don't understand. Right? It's like you're talking to one person that's bipolar. And that's the conversation that's going on, and you can see it everywhere. And people are confused, and it's the fatigue, and you can start seeing it a little bit in the market, to be honest with you. Uh, just a lot of up and down volatility, right? And now you get this big move. Now you get a head and shoulders. Now it's coming down. Now it's going back up again, like I told you it would. Uh, you know, so going into the election, there's going to be confusion. Going into, and I'll put up the 1 minute chart. Yeah, you see it, right? It's popping up. Take quick profits, going back up, right? Yeah, we're going into the elections. We don't know what this wave is going to be. Um, Fatigue of the economy is starting to wear down people. Um, Savings are going to start being drained soon. You saw Nancy Pelosi, right, with CNN. You saw Trump. I don't want a trade deal. Fuck them. I don't, my friend. Yes, I want trade deal today. Now, no, no, not now. I want bigger trade deal. Yes, the bigger. Whatever she wants, I want something different, right? The dictator, and then he points to his neck with his index finger. Kill him. Remember that, the dictator. This is Trump. Everybody's laughing behind him. Anyway, uh, so we're gonna enter a fatigue stage, and I think as time continues and fatigue continues to set in, it gets worse and worse. And the market doesn't do what it's supposed to do. They're gonna get to 2 trillion, 3 trillion, 5 trillion, whatever they decide at some point. Uh, I think it's safe to say that for now, that the market might be thinking that, hey, we're in the second part of the stimulus, not the first part of the stimulus, and not be as excited. We saw France today. Uh, Year over year, growth was down 12% of the economy, GDP. Right? I think this is going to continue. Right? But everything opened up. Why is it down? Why? Yeah, because if you don't consume, there's no need for production. And especially in the U.S. case, and this is again what I said in the beginning, 70% of GDP is consumption. So you got to get consumption back up to January. Uh, you're not going to do that anytime soon. So GDP will suffer as a result. Okay, housing. Uh, you know what happened to all that? Hype. Oh, look, interest rates are low. I'm going to buy and become an investor today. So everybody ran out, got mortgages, applications, houses, whatever, in a much smaller market, of course, because there's less people selling their existing homes because they're scared. So the numbers look good now. They're starting to not look so good. Uh, so again, the well, look, the economy is recovering. It's a V-shaped recovery. V-shaped, my friend. Right? What happened to the V-shaped recovery? I told you, it's just because you opened up. That's it. You're going to get that pent-up demand. It's going to show up as a recovery, and then reality will set in. And that's the state that we are in right now. Bank earnings better than expected. Well, yeah. If you set your expectations very fucking low, they're going to be better than expected, but that doesn't mean anything. So don't fall victim to that bullshit. Let's take a look at the Twitter. And here's something that I posted today. Right? A perfect example of a stable currency thanks to the stable debt to GDP. This is Thailand. And you can see it's very nice and stable, right? Their debt levels to their GDP growth has been, between maximum 45 and minimum 40. Very nice and stable. What's the currency look like? Nice and stable. Okay. Now, you can see the most recent, time period in the 2020, and you had a spike up, came right back down. It's a quasi kind of peg currency, currency if you want to say that. But it kind of proves the point that these people didn't go out and buy junk bonds in the Thai market. They didn't give out free candy to everybody, and their economy is relatively good. But they did fall 12% as well in their GDP. Oop, come back. Here's France. Okay, death spiral going straight down. Let's see how this is going to continue. Uh, uh, Home prices, national wages, right? So you can see that the home prices have been growing faster than wages. Okay, we got to extreme levels of 4.7, I guess, back in 2008. That corrected as prices came down, wages started to rise, and then I guess in 2014 they started to once again outpace wages. All right. What else? House price, inventories. Okay, we'll skip that. We talked about it. Mortgage applications. All right. Nice big spike, right? Of course, you're gonna get demand as interest rates fall. Positivity rate is starting to establish a positive uptrend. Okay. Let's see how long that lasts. Gasoline, we're not worried about. Inflation, you know, there's no inflation. We are willing to accept more than 2% inflation. What is inflation now? I don't know, but we're willing to accept it. Yes, my friend, we will. Could you do that before? Yes, because we were not willing. Now we're willing. Now it will happen because we're willing. I swear, it's like watching the movie Dictator. I'm not kidding. 1.71%. Small business optimism. Ooh, I am optimistic. Garbage. Doesn't mean anything. Uh, Income share of the top 10% left. And then the Dow Jones Industrial Average. This is the savings bubble. Okay? This is the MMT reality, as I tweeted. Pandemic unemployment assistance. V-shaped recovery. Everything is fine. We're recovering, my friend. And, you know, continues to rise. It continues to rise. What can you do? All right, that's it for that. I talked about also that there was some positivity to air travel. We actually hit almost 1 million travelers per day on quite a number of days recently. Okay, so that's 4, 5, 6. The first one was back in October 4th. So there's definitely some improvement there. Okay, we're starting to see these numbers start to spike up. So there's some upward uh, movement. But how fast is it happening, right? That matters. What else? Um, no, there's nothing special in the timelines. Oops, wrong way. Yeah, there's no recent developments from the Fed. Don't forget, Real Macro, come down and subscribe. Patreon.com/RealMacro. Germany, industrial production. I don't know if I showed this before, but obviously, they're net exporters and their industrial production is down 9.6%. Uh, let's look at the 5-day averages. All right. So a couple days ago, everything was fine. We're going to the moon, all-time highs, and we were up 5.5% over the last 5 days. Now it's only up 2% for the day, led by information technology, consumer staples, discretionaries, uh, communication. Well, communication, I think, is more of a dead cat bounce, but whatever. And energy. Ooh, oil is still at 40. Real estate is at the bottom. Okay, for the week. For today, what's leading again? Industrials, energy, materials, utilities. What's selling off? Consumer discretionary, communications, services, and real estate. Financials too. So, the market is not very comfortable right now. You shouldn't have utilities leading. What else? What else? S&P 500. The earnings yields finally have kicked in. And now we see a better picture. Just give it a minute. 2.83%. We're below 3% on the earnings yield on the S&P 500. So compare that to the 10-year. We didn't talk about that yet. I'm kind of jumping around. Where the fuck is it? Okay, rising wedge fell apart, came down. 7.2. Now, again, I'm going to explain it. When the bond yield rises, and let's say it goes to 2.8%, like the S&P earnings yield, right? That's 1-to-1. Why would you go out and buy uh, the stock market with so much risk versus the bonds um, when they're offering you the same yield? Money chases yield, right? So that would put pressure if bond prices bond yield were to rise, that would put pressure on stocks. So keep that in mind. At the same time, if bonds start to sell off and interest rate starts to rise, that would be very, very dangerous. Very dangerous. Uh, because that would signal that there's um, a loss of control of the interest rates. And I would expect QE to come in very, very fast, my friend. But here, QE, yes, my friend, we buy everything, no problem. Cheap, cheap. So I'm not saying that's going to happen. I don't believe that's going to happen. I'm just giving you uh, some flavor, some understanding behind it. Let's take a look at the 30-year. All right, this is about to sell off, and if this sells off, remember, right, bond goes down, interest rates goes up. Uh, so, you know, structure below structure. That would be interesting. Let's take a look at the dollar. Up against resistance. A little bit of fear coming in. Breaking down. Not doing a very good job. Right? How well of a job is it doing breaking down from this structure? Not very good, I would say. But it may be building that pressure before it starts to go. But you can make a very strong argument that this is a falling F flag. Right? If the structure is pointing one way, it moves the other. So, that would be an indication of fear coming into the market. So we'll see how that plays out. Let's take a look at, but for now, the dollar is going lower. Okay, the the bias is to the downside. Let's take a look at the special drawing rights. Right, structure above a structure, holding very strong. The IMF World Reserve Currency is right now performing stronger than the dollar. What about the US dollar, Japanese yen? Let me take this off. I think this is going lower. Okay, this is going lower. And this was a structure, right? Rising wedgie pattern that is going to resolve to the downside. It did resolve to the downside. It's doing a good job of falling down. Uh, expect for this to go lower. Euro USD broke down from this bear flag. I still think the bias is to the upside, okay? Because the bigger structure is broken. Pound, big move up, okay? Consolidating. The structure now has been redefined, expanded, right? There's an expansion of the flag, okay? So this is what we're looking at, all right? So a little bit more upside, at least in the pound. If it were to start to break down from here, somewhere in here or here, whatever, then you can go short. It's very simple. Risk reward. All right. 327, another 33 minutes to go. US dollar Turkish lira continues, the Turkish lira continues to devalue. Okay. US dollar ruble. Dollar is gaining for now, but clearly you can see that this is a tight, tight, tight. And at some point the dollar is going to break to the downside. From where, I cannot tell you, but at some point it will. Okay, so the bias within this structure here is to the upside until it breaks. All right. 1 second, I'll be right back.
Mic off. Mic on.
All right, sorry. Sorry. Okay, USD CAD. Very nice job falling down from the structure, and we're in a bear flag. Right? So nice. And you can take the next move down. Right? On the break, another short. Boom. Okay. I'll put the arrow so next time we look at it, I can say, I told you so. It met my target. If nobody knows what that is, I hate people that say, my target is met, as if they know. Australian dollar doing good. New Zealand, very nice. We're looking for that breakout, right, on the bigger time frame. We're looking for that push higher. The dollar continues to devalue against the yuan, the yuan, the renminbi. Uh, Aggregate bonds. This is a little bit concerning, right? Like the 30-year, it's breaking down this uptrend, and the burden of proof is on the bulls, right? They want to buy bonds at a higher price. You got to maintain this upward trajectory, and right now they're not doing a very good job. Okay, but it's not doing a good job breaking down either. So, junk bonds, the government's favorite asset class. They love junk bonds. Within this bear flag, you know, price should not really violate when you're doing structures. But this is, again, it's manipulated, government purchasing bullshit. So this is good enough for government work. Uh, what else? What else? Banks, please. Banks. The banking system, uh, not doing very well, is it? But they beat expectations. The earnings per share beat expectations. Yep, nobody gives a shit. Because we're going towards negative interest rates, and that's bad for banks. Okay, structure below structure. within this larger structure. Okay. So look for more downside. KBE, another banking, more pure banking ETF, broke out, failing. And biotechnology. You would think this thing would be like screaming higher, right? I don't know. I was bearish in this for I don't know how many years because I'm like, oh look, look, my friend, Eiffel Tower is finished, halas, and not really, not really. Just went into a sideways, broke out. Now, if this is the top, and we don't know, that's not enough of a hook. But if it is, then expect some price action for a very long time like this. Okay, and then resolve to the upside. Why? Because this is our compass. This is the compass. Okay, I hate when it does that. Delete, delete. I'll keep saying this. Uche, you're the man, brother. This is the best ETF you can own. Water, the new gold. Jets, structure below structure. Little expansion of the flag, still bear flag, and this should resolve to the downside. Okay. Hotels, structure below structure. Okay, very easy to see. Both wedgy looking. Expect lower to meet my target. So what's doing better? Hotels or jets? Well, hotels are underperforming jets, which is again, I will say it. It's odd because airlines are more capital intensive, but they're going to get bailed out. So I guess that's why. Uh, if they don't get a bailout by some miracle, then at that point, what I would expect is this to reverse very quickly. Very quickly. Let's take a look at the fags. All right. We were looking for downside in Facebook. We got an expansion instead. All right. So it's still bearish looking. Even though it looks a little bit awkward, right? It looks a little megaphone-ish. Megaphone. We'll leave it like that. Certainly can go to all-time highs, but for right now, we'll stay with the bear flag thesis. Amazon near all-time highs, pulling back. Makes sense. Apple. We have a new Apple phone. What is the new thing? It's different colors, my friend. Yes, different colors. You will pay now to have different colors. It's magnificent phone. Very, very nice. Oh, and we upgraded a little bit the camera. But again, inverse head and shoulders, broke the neckline, broke out. And there's a gap here. But, you know, we can push up one more, I think. One more push up. And then down. That would be an M pattern, right? Because remember, if the market leaders are not going to do an M pattern, forget about the NDX doing an M pattern, right? Netflix broke out. Very happy. Came back. Now, this is a tough one. Is this a range expansion or is this a break test go? Right? I don't know. I don't know. Previous highs have been tested. Okay. So what if it looks like this? Well, again, megaphone-ish, looks awkward. I don't know. I'm not. I'm not willing to do something like that. Nvidia, my favorite. This one. Still holding. Okay. Previous highs. See what it does. Tesla, of course, is going to go higher. My friend, you're talking to Nick. To Nick. What are you talking about? Nick, of course, going to go higher. So, when should you go bearish, Tesla? When it breaks. Okay? Don't be front running shit just because you have a story. Stories don't mean shit. Previous high, $500. Let's see if it can make it there. But again, we would need to see some kind of an M pattern here. So you really don't want to see this go all the way up to $500. All right. Other than that, that's about it. I gave you some rants, some tweets, some economic data, a little charting lesson. Let's go back to the NASDAQ. Where the fuck is it? Oh, it's all the way up here. I have dyslexia, by the way. So things, numbers and letters start jumping around all over the place. All right. So can we say this is a hook? Yeah, I guess. Maybe, yeah. But it's not a hook via price. It's more via time. And this is why hook is such a difficult thing to explain, right? It's more through time. It's more that these lines are rising and rising, and price is not keeping up with it, right? So this was not really a hook. Got another move up, and now we're getting that move down. So we're getting that high base consolidation in here. So it's a hook by time, not by price. Okay. So I'm going to go ahead and I'm going to mark this as a wave C to validate the structure. And again, this is only a small time frame, right? So this is now valid. It's a valid structure. Now we can take the short when it breaks. This bear flag. All right, and it's testing what? The neckline. All right. So that's why it was important. You know, if you took the quick profits when it dropped, and you're waiting for something to see what the next thing is going to be, and often it's not as clear as this one is, but you wait for the next nice setup, the next good risk reward, and then you take it, okay? Until it meets your target, you make some money. Any questions? Questions? Anybody? Talk to me, Goose. Talk to me, Goose. Talk to me. Remember that Top Gun? Talk to me, Goose. It's coming out, man. I'm fucking excited. I'm wet. I am. Can't wait to see it. I'm glad movie theaters are they open now? I don't know. I forgot. Oh, by the way, did you see the NBA Finals viewership was down 50%? Oof. Oof. V-shaped recovery. It's a V-shaped recovery. Oh, San Francisco real estate. Oh, that's down 31%, right? Fuck. Yeah, that's a V-shaped recovery if I've ever seen one. Gotta have a job to pay rent, man. You know, especially in San Francisco. That thing was so out of control. And you're saying 31%? Well, it's not a lot. Well, that was one of the highest real estate markets in the world. And, you know, Logan, with his real estate expertise, never saw it coming. America is beautiful. I love you, America. Yes, I'm looking outside my door. Everything looks beautiful. Beautiful. Better than expected. Experts. I'm going to be on Bloomberg tonight. I'm going to discuss real estate. Not that I understand real estate. I don't. That's very particular. But perma bulls get on my nerves. Sorry for ranting. How do you develop a skill on taking on wrong person to ask? It depends on how you are trading. If you are trading for a big wave, you have to accept moves, big moves, which means that you are going into the trade willing to be wrong for a long period of time. If you are going for short trades, right, like the one we were just showing here, then you gotta do it in two parts at least. So where are the potential areas of reversals, right? Previous highs, previous lows. Those are potential areas of reversal. Uh, then you look at the next potential area of reversal. So, in this case, right, but next potential. So the first one now, if it breaks, is going to be here. Okay, it will be here. The next one would be somewhere here, right? But you need a structure that's going to give you some kind of an indication. This one you should take no matter what. Okay, it's a short-term trade. Don't don't fuck with it. Just take the money and improve your cost basis, right, to reduce risk. Uh, the second potential area of reversal, if everything is going well, it would be somewhere down here. Okay. If this starts to break to the upside, all right, get out. You're gonna have this structure. Right? There's another wave coming to the upside. Right? Wait for the next one and then take it short, or take this long. Now I don't advise flip-flopping trades. I always say every other wave. Why? Because you're gonna get whipsawed, and you're gonna get out of sync of what the market is doing. So stick to a direction. I prefer to use the macro economic data, and I just try to trade in that direction. All right. Doesn't mean I don't reverse it. But I think your question is much deeper. I don't think you necessarily this is what you're looking for, and I don't think most people this is what they're looking. The real question that you're asking is how do you get yourself to stop saying, "Oh man, if I just would have took fucking profits, I was right." Right? That is a you know, normal mental problem. Mental accounting, right? That's what it is. It's mental accounting. You count the times that you could have taken profits and you didn't, and um, if I just fix that profit taking, then I'll be fine. It's not. It has nothing to do with that. It doesn't. It's not when you took profits. It's your understanding of what's going on. I've been in a shitty fucking trading rut, right? It's got nothing to do with what the market is doing. It's got to do more with my mental ability to understand, and I'm not saying mental game here, to understand that what I want to do to take the long trade, the longer term trade, is not the time to do it. Okay, so uh, you gotta change up your weapons. You can't try to kill a fly with a shotgun. Gotta be a little bit more patient. You gotta take quicker profits. It's a different strategy. Okay, and understanding what market you're in, I think, is very, 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 very important. Is it a Parker market? Is it a wave market? Is it a volatile market? Like we've been seeing. Am I seeing what I'm supposed to see clearly? Well, you couldn't tell that this was a head and shoulders when it was happening. This just looked fucked up. Okay, you couldn't see it at the time. Later on, last week, we could finally see. Yes, my friend, brother Numsi, I understand now what you're doing. Head and shoulders. But that takes time, and that's why I say, there's only a certain amount of times in the year you'll make money. You won't make money every single day. Forget that. If you think that, you're dead. You are finished. Just give me your money. I'll fly over wherever you are. I'll kick in your little baby nuts, and you'll get the same um, outcome. All right, brother. Thanks, James. All right, 14 minutes left in the session. 14 minutes. There's nothing, that's going to happen, I don't think, but it is a crazy time. Let's finish this charting here in a small time frame. All right, so where's price sticking? Ooh, below the trend line, right? It's the burden of proof is on the bulls. You got to be able to maintain the rate of ascent on this trend line, and they were not able to do it. Okay. Now, I've said this many times before to my subscribers. Head and shoulder patterns are usually a continuation. Okay, unless they are at tops. As you can see now, unless this is an expansion of the uptrend, which I don't think it necessarily is. It's just small time frame that we're analyzing here, but it shouldn't break the support line. Right? It's supposed to do this. Now it's okay if it does a fuckery move, something like this. Okay, but very fast. It's got to be like a wicky kind of move, or like a wick, like a straight down move and then back up into structure, and then off it goes. Right? It's not doing that. So going into the last minutes of trade, kind of makes you wonder, can this push higher? Going up against the bottom area of resistance now. Now it's resistance. Should have been a support. Right? The burden of proof is on the bulls, and they're not doing a very good job maintaining uh, the uptrend line. So we'll see. We'll see how this resolves. But clearly, right now, you cannot say this is bullish. Right? It's not bullish. So we expect, and I'll put it up here for tomorrow. Hopefully I'll be able to do this tomorrow. Okay. Clearly the next move is down. To meet my target, and we'll see where it ends. Today is my daughter's sweet 16. Woo-hoo. Crazy how time flies. What else? Anything else? Anything else? We looked at the Fed. Nothing over there. If you guys want to take a look at this, it's a NCBI. That anyway, just Google this. Right? It came out on August 6th. It talks about heart injury and post-COVID. I think it's interesting. Okay, because a lot of people, again, they only talk about the deaths. Well, the deaths are not bad enough. It's fine. Don't worry about it. Let's open up. Let's get back to work. Gotta get to work. Get the economy going. Yeah, but there's a lot of unknowns, right? You don't know what the long-term effects of COVID are. And this kind of talks about it here. What could possibly be. All right. Trump, I know. I want more than. What does she want? She wants a 1.82, 2.2. What she want? I want more. No, now I want less. No, more now. The man child. Uh, oh, wait, you can't see that. Shit. Shit. I'll post this. Sorry. Wrong. Wrong browser. I'm still getting used to this, guys. Pathogen of SARS-CoV-2 induced cardiac injury from the perspective of the virus. Okay, just Google this. Came out August 6th. Okay. For the people who think I'm in the 98%, that will be fine. Yes, but hold on, my friend. There's a lot of unknowns. Don't get ahead of yourself, you know. Uh, I need this. Talked about TSA. Timeline. Don't forget, patreon.com/RealMacro. Germany. No update on GDP for a while. Some say it's going to be August 30th or whatever. I don't know when it's coming out. Not sure. The Buffett indicator, look at that. 171%. Corporate equities to GDP. Far, far, far exceeded fucking 2000. Oh, the .com. Ha ha ha. Why didn't anybody see that then, huh? Hey, Bob. Why didn't anybody see that? Yeah. Stupid idiots. Huh. I would have shorted it. Yeah? Why aren't you shorting now? Right? You see, this is why things repeat. This is why things repeat. There's no update also on corporate earnings. Okay, it's still 1.5 trillion for the quarter. Alexi,
Mic off. Mic on.
my youngest son. Just kind of going back and forth. I'm wondering if this is going to break into the last few minutes. Some news comes out, some tweet comes out, or whatever, and you see a sudden blink. See ya, straight down move. We didn't talk about the volume area, and I think we should. I think it's important. All right. So let's go to a 1 hour. Go from the bottom here. Okay. There's been a considerable amount of volume since, what is this? September 24th was the most recent bottom here. Okay. So again, remember I was telling you how you're going to see a jump to that next area, right? Look at that. There's a nice gap, right? Boom. Right to the next point on the chart that had some volume. Okay. So we went from one point, uh, point of control, to the next. Paused, selling off. All right. So we'll see how this backfills or how rapidly this comes to my target uh, as it starts to fall down. I'm gonna start cleaning up the chart here a little bit. I don't need them. I just leave it for you guys. Okay. And let's take a look at what volume has done by price since the top, the all-time highs. And it didn't even quite make it to the top here. All right, so there's a higher point of control. It's not really a point of control, but you see what I'm saying, right? Another peak. It didn't quite make it there. I think it could. Okay, that's why I keep saying I think there's one more up. Okay, maybe it will create something like this. All right, something like that. Okay, and then we can say, oh, okay, yes, I recognize that. There will be a correction to the downside, and it would kind of look like this. right? Like this, kind of like that, and then start to fall apart. Okay, that's what I would be thinking. That's how a market becomes ready for the pullback. It doesn't have to do that, but I think there's still one more up. All right, S&P. Let's see what they're looking at. Okay, pretty much the same from one point of control to the next. All right, that's a hook, so we can now draw it out. There we go. Okay, so from here to here, there's a void right in the middle. Backfilling. How about from all-time highs? Okay, that's it. We're still outside of the range of the 70% of most, uh, where most trades went off. Okay, we're still outside of that from the all-time highs. So that means we're on the extremes of the bell curve. If I recall, I think it was Friday, no, Monday or Friday, we were talking about the P, where price kind of like, you know, there's a point of control is here, right? And then the volume, and that signals short covering, right? And that we should expect sideways market now. And then Monday it opened up, and it was sideways, or what was it, Tuesday or whatever it was. I forget them. But you can go back and see the video. So, 2 minutes left in the market. That's it, guys. Habibis, thank you very much for joining me. I will see what time. You know, I should advertise when I'm going to be on, but my schedule is a little bit off. Um, but typically, I'll try to do it towards the end of the day. I should do it in the morning, but there's nothing really that, I'm not making an effort in the morning because what are you going to say here? you know, market should go up. Okay, market is going to continue going up. Market is going to go sideways. Market is going to drop, but buy it. It's not like you have a nice market where you can say, this is a nice setup. This is what I think is going to happen. Where I can show you the charting, and there's nothing there. There's nothing there. This, in the end of the day, look, see this. What did I tell you, right? And last minutes of the day, this bitch is gonna break. It's bearish. There you go. Bye bye. Bye bye. Sayonara. Sayonara po. Uh, yeah, you see a setup like that, you know, here, take it. Um, yeah, but if I see something, I'll definitely come on and make the video for you. So make sure you like, subscribe, so then you can get the notification. Uh, but if my schedule starts to settle down and it's a nice market to trade, then I'll be on for sure. Okay. Into the close. Below the structure, and we could make the argument another head and shoulders. That's what I mean. It's tired. It looks fatigued, man. Fatigue. It looks fatigued. Head and shoulders broke and breaking the structure. Right. So, do you take this short? Yeah, take the shit out of it. Well, the crossing of the line doesn't matter. Yeah, but it's the end of the day, and you can set your stop here, right? 12,000 or whatever. Pops back up, you get stopped out. It continues lower, make your money. Right? Risk reward. It's the end of the day, the Chinese are going to come in. They're going to do their thing. All right. Again, thank you very, very much. And I'll talk to you guys soon. Patreon.com/RealMacro. Come on down and subscribe. Talk to you guys soon. Bye bye.